Today is a special day here at The Fool, as April 1st not only marks the start of our fiscal year, but is also the one day when we pull all stops to form the ultimate expression of our motto and mission, which is to educate, amuse, and enrich in the name of helping the world to invest better. Hello and happy April 1st. My name is Karen Oxenreiter and I'm thrilled to be here reporting from the Motley Fool's U.S. headquarters in Alexandria, Virginia. That's right, it's April Fool's Day, and for nearly 2 decades, the Motley Fool has embraced this holiday as an opportunity to focus first and foremost on amusement, with equal returns in education and enrichment following close behind. According to the thousands of emails and comments that we receive each year, every one of our jokes is brilliant and immature and downright offensive and great fun and LOL-inducing and despicable, as well as exemplary, depending on who you ask. And we do still receive the occasional inquiry about whether it's too late to get in on that mail-order meringue company, which launched on April 1st of 1999. But ever since The Fool pulled its first prank way back in 1994, the one thing that each joke has had in common is a specific, vital, and timely investing truth built in underneath the fun of it all. This intersection of amusement with education goes to the very heart of what the Motley Fool is all about, both our Shakespearean namesake as well as our investing philosophy. And one day each year, we get to take both aspects to the ultimate extreme in order to, as always, help the world invest better. Now, beginning today and continuing through the rest of the month of April, I'll be speaking with fools from across all reaches of the company who over the years have played roles in either devising or executing on nearly 2 decades of our April Fool's pranks. It'll be a fun and enlightening look back. We'll get to hear from some of the Fool's most brilliant masterminds, and frankly, I cannot wait to get started. But first, something I'd like you to know about me is that I am still considered new here at The Fool, and I'm an even newer investor, having just bought my first stock yesterday, as a matter of fact. So, like many of you, there will be just as much for me to learn from this month-long April Fool's Day retrospective as there will be to laugh about. First up is John Reeves, a seasoned investor and TopFool.com writer who was instrumental in helping to pull off last year's Motley Fool IPO, which, by no coincidence, occurred on April 1st, 2012. Hi, John.
Hello, Karen.
How are you doing today?
Good. How are you?
Great, thanks. And thank you so much for meeting with me to discuss last year's April Fool's Day prank. It was a good one. The Motley Fool on April 1st, 2012 announced out of the blue its initial public offering. And what I wanted to know from you is, why was this prank in particular chosen for last year?
Yeah, well, you know, we wanted to focus investors on the whole IPO process. If you remember, Groupon had gone public immediately prior, and Facebook was soon to go public. So it was in the news. People had been thinking about it. Obviously, in Groupon's case, there had been some problems with their accounting. There had been concerns about their business model. And then in the case of Facebook, people were, you know, kind of wondering, hey, what's the valuation going to be like? And does this company have a proven way to grow its business over the long term? So anyway, IPOs were being talked about, and we thought it was a great opportunity to discuss it and maybe teach a bit around some of the big issues.
Okay, so there was a lesson behind this, and if you had to sum up that lesson for investors, what would it be? Yeah,
great point. I'd say the easiest thing would be to say people should take their time with an IPO. So one of the things that happens is a lot of investors want to rush out on day one and buy shares in the company that goes public. What we recommend is take your time, understand the business, make sure that the valuation is right, and that, maybe 6 months, 12 months down the road, those shares will still be there for you. Facebook, once again, is a great example. It IPO'd at $38 a share. It went up north of 40 there for a while, but now, almost 1 year later, it's still at around $25 per share. Obviously, investors didn't have to jump in right away on that one. So maybe the big takeaway is slow down, take your time, learn more about the business, and don't be so in a hurry.
Okay. So in terms of the Motley Fool's IPO, what was the reaction? Did people jump right in? Did people see right through it?
Yeah.
How did the public respond?
Oh, yeah. So the response was all over the map. We got over 18,000 emails. And many of those emails, I would say, a good percentage of them wanted to buy shares. How do we get shares? And so they were kind of really eager to get in without, by the way, even knowing a lot of the additional details that one might want to when investing in a company. So people were eager to buy shares. A lot of people, though, I should say, too, they knew we were joking, and they played along with the joke, and that was fun. In the comments section, people were making their own jokes and their own sort of plays on what we were trying to accomplish, and that was great too, and we kind of like people playing along with it. And then finally, some people were mad at us and were saying, you guys need to grow up and stop trying to trick us, and you guys should be ashamed of yourself, all that sort of thing. So the responses were all over the map, but I think the big thing for us is we were surprised how many people actually wanted to buy shares, because we didn't think that it would be anywhere near the amount that it was.
So I guess lots of disappointed potential shareholders
right.
The next day upon the reveal.
And you hate to turn away future shareholders.
Sure. Now I have here the Motley Fool's official SEC filing, which was posted on Fool.com on
fake
April
official
1st.
SEC filing.
Exactly. And I have to say, the deeper that you get into this, the crazier it gets. Now, if you had to pick out, this will be tough, but just 3 glaring red flags from this document alone that should have or could have tipped off potential shareholders that something wasn't quite right here, what would it be?
Yeah, so great question. I would say one of the first red flags was how sudden this all was, right? So, when a company goes public, usually there's a long lag time or ramp-up period where you get to study the company and see their business and take your time. We went public immediately out of the blue. We say in the S1 that we've had a really busy 4 weeks getting this all together, which is, not a very long time at all. So the suddenness maybe was red flag number 1. A second red flag is that we talked a lot in our materials surrounding this fake IPO about how people were going to make a boatload of cash and they were going to get rich and all that sort of thing. And remember earlier I was saying, actually, you don't have to get in at day one, and you shouldn't look at this as a way to kind of get in quick, make the money fast, and then get out. We always preach long-term investing and being patient and having a business grow over a longer period of time. So that sort of get-rich-quick mentality would have been a red flag for people who knew us. And then the final thing, too, was about Tom and David Gardner, the co-founders of the Motley Fool. In our IPO, we're selling all of their shares so people could have access. And we, of course, always teach the opposite, that we like businesses where the founders or the executives have high insider ownership of shares. So, that notion that Tom and David were selling all of their shares should have been a red flag. And then finally, another clue was that if you looked at the picture of the Motley Fool's office, there was a falcon flying above. And we usually don't have falcons flying around Alexandria,
not
Virginia.
In these parts. All right, John. Well, thank you for that recap. And remember, fools, no matter what the hype, even and especially if it seems too good to be true, IPOs require your due diligence. And be sure to check out our YouTube channel throughout the rest of the month for new interviews covering the best of the Motley Fool's historic April Fool's Day pranks. And of course, there are invaluable underlying lessons to help you invest better as well.